Welcome back to Halftime Report on CNBC-TV18. Nifty as of now 25,680 levels, down almost 85 points in the trading session as of now. So it continues to be where we started the show with, not much of a change there. But Aurionpro Solutions, that's the next management on the show. Margins of the company stable at 20% when you look at it, not much of a change there. Revenue of the company on a year-on-year basis has seen a growth this time of around 28%. Half year also growth has been at 28.6%. What is the outlook of the company? What segments have done well, and what is the outlook, especially in terms of geography-wise performance? That is what we'll be understanding, and to understand that, we have Ashish Rai, Group CEO at the company, to speak with us about that. Ashish, good afternoon. Thank you so much for joining us as always. First I want to start by talking about the revenue. The last time we spoke, you had mentioned that, you're expecting a steady CAGR growth of 30% is what you are watching out for. Now, in the first half of the year, we have managed 28.6% growth. For the second half and the rest of the year for FY26, do you think this 30% is something that you will achieve? And are there any sort of delays that were seen in the first half of the year from clients in terms of conversions?
Great question. First of all, good afternoon. Thank you for having me again. First half of the year, both the quarters, we've grown about 29% in sort of all ways. There is an excellent quarter for both the major segments for us. Banking grew strongly. We had a couple of deal delays, and I don't think that's a material impact overall. We'll close those deals out in Q3 and we started work. TIG obviously grew strongly. Both sides of the businesses had significant wins. On the banking side, we announced UCO Bank, for example, in Q2, sort of establishes us as the sort of partner to go to when someone wants a large transaction banking transformation, any of the large banks who need a transaction banking transformation. The MMRDA on the transit payment side, the two lines that we have, that's the largest order we've won in our history. That sort of firmly establishes us as the player, the partner of choice for transit organizations, across the country. So I think significant wins, significant traction. I would not read too much between 29 and 30%. I think so at the pace at which we are investing in our products, the pace at which we're expanding globally, it's very hard to calibrate the growth down to a single percentage point. I think, so we'll always be a couple of points up or down. I think that we don't plan to that level of precision. I think when you're growing at 5-6%, you can do that, and growing at 30, 35 like we have. And now for 4 years, 5 years in a row, I don't think there is any listed technology organization that's grown at 30% plus the last 4 years, right? So I think 1 or 2 points here and there will always happen from one quarter to the next, but it was an excellent quarter, and I think the business has continued to grow.
Right. The business will continue to grow. There's no problems when it comes to your P&L, but I'm looking at your balance sheet, and here I see operating cash flows having turned negative as compared to what it was in March. And a large part of that reason is because trade receivables, they've increased from 305 crores to close to 387 crores. So while your revenues have grown by 30% as well, as have your receivables. So just wanted to understand if there is any specific problem that you're facing out there, and by when do you expect to get this?
Yeah, so it's the same question I think we discussed probably middle of every year, and that's the nature of the business that we have. Typically, product businesses will not be linear. For us, a lot of our payments are skewed towards go live of the products. Typically, most products takes 12 to 14 months. So, on September 30th, last year, the year before, we had the exact same sort of situation. We do a lot of business. We pick up a lot of new projects towards end of the year, and it typically takes 12, 14 months to take the client live, so which means the end of the following year. By the time we get into Q4, we do most of the collection. So if you go back the last few years, we probably have been able to convert at least 80% plus of EBITDA to cash by the time we finish the year, maybe even slightly more than that, net of tax, of course, right? So I think typically our cash conversion is very solid by the time we get to the year, but middle of the year, we'll have the same situation.
I remember sometime last year when we had spoken, you had given the pace of growth, not ruled out a possibility of getting to what? 3,000 crores by FY30 or 5,000 crores by FY30? Can't quite remember that number.
I will be very disappointed with 3,000 crores is what I can say.
So 5,000 is what it is, right?
we don't give guidance that far out, Maglan. But basically, we expect to. So the goal is to build out global products and platforms. We have a Vision 2030. We said top 3 global player in each of the spaces that Aurionpro is.
Yes.
That player is a very large player. I would hesitate to put a number to it. I know, a lot of people like saying $1 billion and all that stuff because it's a round number. We have a very precise number which we work towards. Since we published it in 21, we've beaten it every year, and I think we are probably the only technology player who's growing that strongly, and we intend to continue to do that.
I've pulled out that quote. It says that you don't rule out 5,000 crore revenue by FY30. So that's your quote. I see you laughing at that.
Right. I mean, if you see from 21, when we started our pivot to becoming this global products player, we've grown at roughly 32-33% CAGR, which means we were 375 crores in FY21. We are something between 1550, 1600 crores this year, right? You just fast forward that to 2030, the same pace, you go up another 4 or 5 times, right? I think, beyond the point, put our heads down and execute, build great technology, clients want to buy, and we'll grow what we grow.
Ashish, just what about your US and Europe business also? You said that you expect Europe to scale towards double digit in terms of sales mix. When would we expect Europe to be in that double digit side?
I would say so. I think if I remember precisely, the last time I said 24 months. Look, I think Europe is new to us, and typically getting into any new market needs some discipline and some patience. We know that. I think we built up a fantastic team. We also did the acquisition with Fenexys, Eric Rosso and team, like really, really strong, extremely strong talent. We have made significant investments, and of course you're seeing the effect of that on the P&L. Otherwise, EBITDA would have been way north, but we feel good about Europe. I think over the next 4-6 quarters, it would grow very strongly.
Right. What is the give out here, Ashish? Because you're growing extremely fast. There is no concern with your balance sheet as well. That was an investor concern earlier as well. You explained that once again, but the stock is significantly off the peak. If I remember correctly, it used to be around 1,1900 rupees at peak. And now it's around 1,100 rupees. So just trying to figure out what is it that the street is, 2 and 2 don't act together, because if you're growing at a certain pace and everything is good, you intend to grow 4 to 5 times in the next 5 years, the street would typically reward that with a good price up move in what one would see in the valuation as well.
Yeah, so look, obviously, it's hard for the firm to decide what the right price is. Yeah. I can tell you what the value is. The value, I think there are 3 levers of value that we have, right? I mean, one is the revenue growth and the profit growth. I think we've been one of the fastest players for the last 4 or 5 years. We intend to be there. The profit margins wise, 20% plus, again, consistently, we expect to be there. Of course, in the product business, you need to keep investing significantly in R&D. Otherwise, we can actually drive the EBITDAs north at some point in time. And the third thing is the IP. I think that's the most important value that no accounting statement actually captures, but we are building out absolutely world-class technology that's going and winning out there. We are the #1 loan origination software out in Asia. We are the strongest transaction banking platform out there. We are the most integrated offering in transit payments. So the goal is to create that IP, which is of value significantly. Look, like Buffett says, right? I mean, over the short term, it's a voting machine. Long term, it's a weighing machine. We pay for the long run. I think market can decide what the right price is.
All right, we'll take that point. You quoted Warren Buffett. We'll obviously also like to see some promoter stake going up from 31%. It had fallen to about 26%. So we'll get an eye out on that one as well. Ashish, wish you good luck for the remainder of this year. And obviously, we'll continue our conversations here on CNBC TV18. Take a short break, come back, getting more on the markets and stock-specific action. Stay with us.